Hello and welcome to this special half hour on everything auto. A lot is happening in India Auto Inc. and that's called for a discussion. I mean, the world's richest man is coming to India to meet the leader of the biggest democracy with his electric cars in tow. Rural India is buying big cars. Naturally, there's also a pileup of small cars. Let's delve right in. Tesla CEO and the world's richest man, Elon Musk, has announced that he's coming to India to meet Prime Minister Narendra Modi. He should be here in a fortnight or so. That's what we gather from reports. The visit is relevant. Tesla is reportedly scouting for locations to set up a plant and make electric cars in India. And Musk may just make the plans official after meeting the Prime Minister. That will work in Modi's favor too. The announcement of a Tesla investment in India would bolster the business-friendly credentials of the Prime Minister ahead of the Lok Sabha elections that are supposed to start in a couple of weeks. His government recently modified India's EV policy that lowered the import duty for electric cars from 100 to 15% if a manufacturer invests at least $500 million in India and sets up a factory too. This 100% import tax was a key sticking point for Tesla's entry into India. But what does Tesla's entry actually mean for the local ecosystem? My colleague Puneet has more on this. Puneet?
Yeah, thanks for that, Tushar. And as you rightly said, Tesla's entry is going to be big. And we are looking at some of the companies in the auto component space that are going to be the key beneficiaries of this. Now, this list is not exhaustive, but these are the first ones. Sona BLW is one of the key auto OEMs which stand to benefit. They have currently 28% of its revenue already coming from the EV space, and post its listing, the stock has been on a tear. Sansera Engineering is one of the second ones that we're tracking. Currently, 18% of the order book is already coming from the EV space, and they intend to build on for the next few quarters. Motherson Sumi, the legendary company in the auto ancillary space, is one of the third ones that we are tracking. Currently, they have 21% of its revenues coming from India, and with the export markets of Europe and America being subdued, we see that this could be a key beneficiary with a higher revenue coming from the Indian subcontinent, and players like Tesla betting on the legacy players such as Motherson Sumi. The fourth one we're tracking is Varroc Engineering. Now, new EV orders is set to increase the revenue for someone like Varroc. While they see that they will be performing better than the industry, they also see that the content per vehicle remains high by 5 to 6 times for them compared to ICE vehicles. Endurance Tech is one of the fifth ones that we're tracking here. They have currently 8.5% of its order book coming from the EV space, while also roughly 26 to 27% of its revenue comes from the four-wheelers. This percentage is set to increase with the likes of Tesla coming in and partnering or tying up with companies such as Endurance Tech. The next two companies are in the bearing space. So SKF is the first one in the bearing space. Currently, they have said in the conference call that for EV specifically, the bearings needed for the same vehicle compared to an ICE is coming down, but the price per bearing has gone up. So they don't see any kind of revenue impact from a shift from ICE vehicles to EVs, while they also see an increased focus on the EV space going forward. And finally, Uno Minda. Now, the company currently does not have any revenue coming from global OEMs, but that would change with the likes of Tesla coming into the country. They have currently 49% of its revenue coming from the four-wheeler space, and there was a news flow on the company today as well that they've held a groundbreaking ceremony for its passenger vehicle alloy wheel plant, which is set to go forward and commissioned by somewhere FY25 to 26. So those are the key stocks that we feel will move the needle in the auto component space with the entry with the likes of Tesla. And that's all we have for now. Back to you, Tushar.
Thank you so much, Puneet. We already spoke about the India EV policy that was declared by the government some time ago. We did a bit of research into it, and we figured out that the EV policy is actually a $2.1 billion localization opportunity for our local companies, as what Puneet said right now. So we have the EV policy actually indicates a wish fulfillment for ACMA, which effectively means in terms of localization. Volumes will go up, which effectively means the localization will also go up. Global EV makers, which invest about $500 million in India and as well as set up a plant in India, can actually get the most of the benefit of India EV policy. So to speak to us more about that, so they have to do 3 years and 5 years, about 30% in 3 years and 50% in 5 years. So to speak to us more about that, we have Gaurav Vangal of S&P Global to talk to us more about Tesla's entry into India. Mr. Vangal, welcome to NAV Profit.
Thank you, Tushar.
Yeah, hi. Pleasure to have you at such a short notice, actually. So first of all, how do you see Tesla's India entry impacting the local ecosystem?
I think that is one of the most significant things which we are expecting, that it will definitely impact the ecosystem, from the supply chain, from the vendor build to the charging infrastructure and the cost structures of the Indian EVs ecosystem. So that's one of the major things which we're expecting from Tesla to bring to the market. It will definitely have an impact on the technological partners, suppliers, OEMs, infrastructure, charging infrastructure, which I've already mentioned, right?
Okay, so Mr. Vangal, let's break down that a bit into parts, into various segments of the industry. So how does that affect local automakers? We know that Tata Motors is 75% of the market in the EV space. Mahindra is stepping up along with Volkswagen. So what does this particular Tesla's entry mean for the local players?
See, initially they can say, because Tata Motors is a leader right now. Initially, they can get an impact because the new entrant is coming to the market. But in the long term, I think Tata Motors is also going to get benefited because of the cost structures are going to get low. Whenever the new technology comes, they have the higher prices initially, right? But when the scale reaches out, and we expect the Tesla to bring scale into the EV ecosystem in India. The moment the scale will reach, I think the similar kind of suppliers are going to give the technologies to the Tata Motors and the Mahindra. So that time the cost structure will be impacted, and I think it's very, very good for the overall ecosystem, and the local car makers are going to have a significant impact on their cost structure in the long term, and they can also drive their export strategy after this kind of cost structures.
Puneet, my colleagues recently actually spoke about how it impacts auto auxiliaries, but we'd like to get some sense from your side as well. The EV policy mandates about 50% localization in 5 years. So how does the India components ecosystem look like in such a scenario?
See, I think there is a concern within the country that we do not have the developed ecosystem to support the EV penetration levels, what the Indian government is expecting us to do, right? For that, we need a technology. And if the technology get imported from the Tesla, and we expect that when Tesla will enter, they will definitely bring their own vendor build. They will also invest in the local manufacturing, local supplier basis, and that time I think local suppliers do have the must have the businesses coming for their own benefits, right? So that is what we are expecting, that whenever the Tesla will come, they will bring the ecosystem, and then it is going to benefit the auto ancillaries. And please mind, Tesla is not going to come only for India, what we are expecting. We expect that it should also bring the export orders with them. And the moment we get the export orders, I think we will get the scale, and the scale will definitely help the auto suppliers to build more capacities, and whatever the capacities they have, they can utilize it in a better way.
Next, as in real estate, we have the same logic in setting up auto factories, that is location, location, location. So where do you think Tesla would set up its plant? We have a few states in consideration: Tamil Nadu, Maharashtra and Gujarat, with well-developed ecosystems. Also Delhi NCR because of Maruti and its auto suppliers ecosystem. What would be the best location for Tesla? What do you think would work for Tesla, again, with the exports in focus?
I think Tushar, we should wait for the announcement.
Okay.
Okay, because the things are in discussion right now in multiple governments. What we read also from the media reports, right? But yes, having a port with them, because if they are going to target the export market, having a port in the state is always having an added advantage on it.
Okay. A couple of more questions. We have the economies of scale to our advantage. Our quality levels are significantly higher. In the last 40 years, we have developed a significantly robust auto ecosystem in India. So does that make, I mean, Tesla has already said that it does not want to make, but do you think Tesla can bring a cheaper car than the Model 3 that will be made in India? Is that a possibility that you see?
I would not like to speculate here, because the recent media reports, you say that
Yeah.
there are media reports that they are evaluating all the models right now, and but for Indian market, I think for to begin with, I think if they come even up the upper segment, it will work, because they have already have a reduced uh, uh, import duty on it. 15% import duty has been given for the new EV policy. I think that is going to definitely help them to penetrate the market very initially.
All right. Actually, Mercedes today only said that it's about three of his cars are priced about 1 crore and above. That's what buyers are buying. Finally, let's talk about the charging infrastructure a bit. We have seen in the recent past that the Tesla superchargers are becoming the standard in the US. Do you think something of those lines happening in India as well?
No, I will not. I don't foresee this, because I think they have to share the charges if they can, because charging infrastructure is the one of the major issue that we cannot have a better penetration in EVs till now, right? And I think somebody has to invest, and companies together has to invest. I think today only there was a media report coming out that Mercedes is fine to share the charging infrastructure with them. So I think they have to draw their own strategy on it. With the superchargers, I really doubt, because we have to have the complete power grid infrastructure to support such kind of heavy installations. So I would like to wait and watch that what kind of chargers they are going to bring into the market.
Very
It
interesting,
has to
sir.
be
Yeah.
frugal. So Tushar, it has
Yeah.
to be frugal
Yeah.
technology,
Yeah.
and because you're entering into India, you wanted to cater the domestic market. I think you have to innovate multiple things, and I believe Tesla is good enough to do all this stuff.
All right, that's very interesting point that you made at the end, Mr. Vangal. Thank you so much for all the insights. That was very helpful for the show. Moving on, Puneet actually is on again regarding the dichotomy that is facing Maruti Suzuki at this point of time in terms of its inventory build-up, wholesales and retails. Puneet, take it away.
Yeah, thanks again for that. So, as you rightly said, we've looked at the FADA data which comes at the first week of every month, which is basically the retail data which gets registered. So, if you and I purchase a car and we register it, that gets captured under the FADA data, which is the Federation of Dealer Association of India. Now, compared to that, on the first of every month, the companies also on an exchange filing reveal the wholesale data points. Now, what we've done is for the past 3 months, that is from January 2024 to March 2024, we've just taken all these particular numbers and had a comparison. So, if we look at the FADA retails, there have been roughly 4,30,000 vehicles that have been registered and by the buyers of these vehicles, while the wholesale numbers are at roughly 5,84,000. Which are the retails which the company registers and in the exchange filing mentions. Now the difference of this is roughly 1,53,000 vehicles, which is basically the inventory number which is kept at the dealers at this point of time on the 1st of April. So when we compare this number with the previous year of 2023, so compared to January to March 2023, we see that the difference is stark. Compared to last year, the number was roughly 1,03,000. So this year the number has gone up from 1,03,000 all the way up to 1,53,000. So this means that the inventory has been put in by the company with dealers. This could be for SUVs as well as for small cars as well. So effectively, this is a 48% growth compared compared to last year. Now, what could be the potential reasons for this increase? The first one is the festivals have shifted from March to April this year, which is specifically Guri Padwa as well as Navaratri. This has gone to the first week, roughly on 9th April is when both of them started. And we've seen in autos, the purchases are generally across, planned across by the buyers across these festivals. So we see that for CVs, for smaller cars, as well as for lower CC bikes, 100cc and below, we've seen generally that around the festivals is when buyers effectively want to get on a Shubh Muhurat. So we've seen that is one of the key. The second thing is that we want to also, which will be once the company releases the Q4 numbers, is what is the small car inventory build up. Do know that for the past 2 years, the small car inventory, the small cars haven't done, it has actually degrown, and Maruti is one of the key beneficiaries for growth in small cars. So those might be a couple of reasons that we feel that the inventory has been built up before the festivals, expecting, this could be that they could be expecting a better year for FY25 starting with these festivals for smaller cars. So those are the numbers that we've looked at, and that's all we have for now. Back to you.
Joining us today is Mr. Naveen Philip. He's the MD and founder of Popular Vehicles. And Nikunj Sanghi is the MD of JS Four-Wheel Motors. First of all, gentlemen, welcome to ND Profit.
Pleasure.
Diving straight into it, gentlemen, I would just want a comment from each of you about the fact that we are now into the new fiscal. What is the inventory that is carried over from the previous fiscal, and what are the sales trends looking back like at this point of time? If you may start with Mr. Philip first.
So since we handle across brands and across the number of wheels that is there in the automobile, in our two-wheeler category, in the two-wheeler electric category, there's hardly any inventory. Most of the inventory got exhausted, also because of the FAME subsidy issue. So most of the inventory got exhausted by March itself. So we're starting afresh in the EV category per se, both in two-wheeler and three-wheeler. In terms of passenger cars, the inventory is hovering around 30-32 days across. And in terms of luxury cars, about 15 to 17 days. That's what the inventory level is. Commercial vehicles, the small commercial vehicles are at an inventory level of about 25 days. The medium-heavy commercial vehicles, and the HCVs are all around about 10 to 15 days stock.
Okay. Mr. Sanghi, what's the scene at your end?
I think starting with two-wheelers again, two-wheeler inventories are high because I think most manufacturers wanted to push in as much inventory as possible and get a good wholesale number for the financial year, last financial year. In four-wheelers, the inventory levels are around 30-35 days, and I think the sales trends are reasonably positive.
So are these inventory levels optimum, or is it on the higher end? What is the sense that you're getting at this point of time?
Well, I would say they're definitely, as dealers, we would normally want an inventory level which does not exceed 15 days. And on the outside, 21 days. So anything more than that is definitely does put pressure on dealer inventory.
Okay. So, Mr. Philip, just tell me one. You have Maruti Suzuki dealerships. You're saying that's at more than a month. But what is the mix of the inventory looking like as in terms of both hatchbacks and SUVs? What is the sense that you're getting there?
So around 30 days inventory. The inventory is skewed towards hatchback. In terms of SUVs and the Nexa models, it's a lower inventory, except for Baleno and, as you said, the hatchbacks are slightly higher inventory. But going forward, looking at the trends that we're seeing, this is, it's not too abnormal a month per se in terms of March closing numbers. So I think over the first quarter, I think the inventory levels would stabilize per se.
Okay. Mr. Sanghi, the case may be a bit different for you because you handle Mahindra and Mahindra. So we have seen so far they have very long waiting periods. So actually, have they come down? And do we even have some inventory of Mahindra and Mahindra with you?
Well, the waiting periods have come down, and yes, we do have inventory. So there are critical models where the inventory levels are very low. But you know that Mahindra is all the way from three-wheelers to luxury vehicles. So if you look at an average inventory level, it is around 30 days. But yes, there are some models where the inventory levels are low and the waiting lists are there. But waiting lists have definitely come down from the previous months.
What's the scenario at Hero in that case? Are you seeing an uptick of commuter vehicles? Especially, I'm asking from if you can give us a picture on the sense of the rural uptick as well as the urban uptick in the case of Hero, sir.
So I think there has been a positive movement at the entry level, and I think that benefits Hero the most. And this quarter, the first quarter of the financial year, is very, very critical for Hero because this is when the rural uptake happens because the harvest money comes to the farmers at this time. And this is the time when they would want to acquire vehicles. So that how we do in this quarter almost determines our entire financial year journey. And we are looking at it as a very positive quarter. Since I think since festival, we have seen an uptick in the entry-level bikes, and I think that's a very big positive.
How is Hero's premium play looking like in that sense? They have a few models that have come in, also in alliance with Harley. So are you handling any premium outlets? I think they have launched a new range called Premia Exclusive Outlets.
So, well, I'm not a Premia exclusive outlet, but yes, I do handle Harley and I also handle the Charisma. I think it's a very positive for Hero because it's drawing in customers which never came into Hero. And that's a very big positive, and it'll definitely have a rub-off effect on the entire range of Hero. We are looking at it a very, very positive step.
Mr. Philip, let's talk about a little bit about luxury cars. What is the trend that you are seeing there? We see companies, the German automakers, even Honda seeing a revival right now with the Elevate coming in. What is the sense that you're getting? They say that they're looking at record sales every year. What is the story from your end?
If you look at, we handle Jaguar Land Rover. So if you look at JLR sales year on year, all India, I think they've grown by about 81%. But you should also understand that 2 years of COVID were actually very low years because not just because the lack of demand, but more importantly, the lack of supply. Because of chip shortage, transportation issues, shipping issues, there was a huge shortage. So I think there was a pent-up demand that went ahead. And hence the growth has been 80-81%. We ourselves in our Karnataka market, we have grown by close to about 110%. But going forward, I think the growth would be more muted. I think in the region of about, it would be in the region of about 10 to 15% growth, max about 20% growth is what we are looking at.
All right. A final question to both of you. We'll want your views, both of your views on that. What is FY25 going to look like? There are some reports or trends saying that there will be some muted growth in urban sentiment, some muted growth in urban sentiment. There'll be some signs of rural revival as well. So going into the next year, what is the sense? First of all, Mr. Philip, to you.
Kunj is a veteran, so I think he should be starting. But anyway, I'll give my 2 bits. And the passenger car industry last year, if you look at it, grew by approximately about 10.5%, 11%. This year, we're looking at more towards about 6-7% in terms of growth in terms of the passenger car industry. The luxury car, I've already mentioned, it should grow by about 15 to 20% as such. In terms of commercial vehicles, the first quarter would be muted because usually during the election time it is muted. But we're seeing that the construct segment and the small commercial vehicle segment, which was a bit slow last year, would hold the growth story in the commercial vehicles. And we're expecting robust growth both in construction and small commercial vehicles. Can't say that much about the haulage trucks. I think that would be in the 4 to 5% growth per se. This is what we look at. In terms of the EVs that we handle, Ather, we are looking at close to about 35 to 40% growth, depending on how the FAME is accepted and how the companies play that. And with the family scooter being launched, I think we're seeing a robust growth in
that. Mr. Sanghi.
I think Philip is bang on. And so because we're starting on a very high base of last year, I think there will be muted demand this year on the high base. Passenger cars, while SUVs will keep growing the way they have, I definitely expect an SUV growth of about 15%. But overall, I think the passenger car industry would be a high single digit is what I'm looking at. And why I say so is because a number of new launches are planned by almost every manufacturer, and new launches have always been very, very positive for the market. Two-wheelers, again, because of very good harvest that we are looking at And since the agriculture commodity prices are holding up, I think there will be a rural uptick, which is good for two-wheelers, specifically at the entry level. For electric vehicles, I would want to wait and see one because the present FAME policy is only for 3 months, and a larger FAME policy is yet to be announced by the government. And what the government wants to really do with the FAME policy will have an impact on the EV market. But overall, I think the EV market should also be a growth trend because the TCO for EVs is definitely very, very positive, and consumers are now more confident of buying an EV than they were ever before.
Okay. Just final one outlook question to you, Mr. Sanghi. Do you think the rural sales growth will outpace urban sales growth in FY25?
I think it will. I definitely think it will. After 2 years of subdued demand, rural is looking up.